Good morning, traders and investors around the world. Welcome to this Wednesday's edition of PreMarket Prep Plus, Wednesdays with Wedbush, joined by Robert Driscoll, Senior VP covering the always tricky biotech sector. Let's run down the futures real quick before we get to Robert and what he's looking at in the biotech sector. S&Ps are off the low. We're down 15 and a half handles at 39.25 even. Off the low by 12 handles. Important for that pre-market low to hold. Crude kind of hanging out here near the highs in the move up 87 cents, 110.64. Gold giving some back of the 4-day gains up down 1880, 1846.60. Silver down 28 cents, 21.78. That's where it's trading at. Bitcoin, that's up 240 at 29,545. Ethereum, that's going in the opposite direction today. That's down $50 in 1956. So let me stop the screen share here. Bring in Robert Driscoll, Senior VP at Wedbush Securities. And Robert, how are you doing today?
Doing great, Joel. How are you?
I'm doing well. So, how did you get to be a biotech analyst?
That's a good question. So my background's really all academic science. Lots of working in labs, PhD back in England and the UK, before moving out here to go to Stanford for many years. Lots of basic biology of cancer research.
Okay. All right. So, what's plagued the biotech sector here over the past couple of years? It's really taking it on the chin. Can you put it down to a couple different factors that are causing that?
Yeah, so obviously markets have been choppy recently. Biotech sector has been weak for over a year now. That weakness really accelerated towards the end of last year. As a whole, the XBI, which tracks the smaller cap biotechs, that's down around 55% from the top back in February 2021. What's going on? So first, I think, the result of the pandemic, the lightning fast development of the COVID-19 vaccines, biotech stocks got a little overbought, as maybe were other innovation-focused stocks, such as early tech companies. There's just been a shift to less risky companies and less risky asset classes. We can point to a few biotech headwinds. COVID-19 forced a lot of clinical trial delays. There's been less positive news events, lots of catalysts in general to help with those valuations. Number two, M&A has been relatively weak compared to historical kind of levels. And third, there's been a large expansion in the number of biotech companies, both private and public, in recent years. This is in itself isn't bad. It does stretch public investor dollars, public investor attention, and there's maybe also more competition for those certain drug targets that everybody's going after.
So, what area in the biotech do you focus on?
So I focus on small cap oncology generally.
Okay. All right. And so let's get to a few. So that's basically around 500 million in market cap, maybe a little above, a little below. Those are the ones that you're covering.
Yeah, that covers it.
Okay. So we got a few different companies to look at, and let me go back to my screen share. So while you're talking, do you look at technicals at all, or are you just do you strictly go on the fundamentals? Do
We,
you
we,
use
we're mostly fundamental. We obviously have to keep in mind the stock price and where the company's at.
Okay. All right. So we are looking at Replimune Group. Tell us about what they do, your price target, and what they have coming up, a potential catalyst.
Yep. So this is a late-stage oncology-focused company. Platform's focused on developing something called oncolytic viruses. So these are viruses designed to specifically kill cancer cells, leave normal cells unharmed, and at the same time stimulate the immune system to come in and essentially finish the job. We've seen some really promising data in both non-melanoma skin cancers, melanoma skin cancers, kind of early clinical studies. Really favorable safety tolerability profile, and they have two ongoing clinical studies that we're focusing on. One of which got an interim readout at the end of the year. The other's going to have top-line data early next year. They're also starting to focus on other tumor types, such as liver cancer, head and neck cancer, colorectal cancer. We see lots of good rationale to believe we'll see some nice activity there. These guys have about $395 million in cash. That's good through to the second half of 2024, where they should be hopefully, well into the commercial stage. Price targets, I think, 52.
Okay. All right. We'll keep an eye on that one. But you said no data coming out till the end of the year, then, correct?
Yeah, we've seen a little bit. We'll get some other stuff from the rest of the pipeline, but not those kind of two main clinical trials that we're really focusing on right now.
Okay. Next one's staying in the oncology, Cura Oncology, Kura. Looks like bunching up here, just under $13. What's this company do, and what are the potential catalysts?
Yeah, so Cura's is a targeted oncology drug, precision medicine. It's got a drug in development for a type of blood cancer, acute myeloid leukemia or AML, where we think that drug's going to work in about 30 to 35% of patients who have a specific mutation that's driving that cancer. Company has an upcoming data readout in Q3 that investors are focused on, and I believe we should be excited about it. There is a competitor drug out there, a little bit ahead in development. We think this kind of upcoming data has potential to show some better efficacy for Cura's drug. We really like targeted oncology drugs, precision medicine, especially in this case for relatively large patient populations. They do often have a higher chance of success and more rapid development timelines. Cura's got I think 480 million in cash. That should be sufficient to the end of 2024 as well.
Okay, a couple years. Okay. And the next one we're going to move on to is TNGX, Tango Therapeutics, just kind of hanging out here at the $5 area. Quiet couple days. What are they focused on, and potential catalysts in their cash position?
Yeah, so again, TNGX, targeted oncology companies. Got a little bit of a twist. Instead of developing drugs that directly target the drivers of cancer, they're instead going after the targets that the cancer cell requires when certain genes are mutated, so the so-called tumor suppressor genes. So their secret sauce really centered around their ability to screen for these targets robustly and have a higher confidence of success in the clinic. The technologies enabling this only really been developed in the last few years, and they're really the leaders here. So, we see a number of programs in development here that could drive future value. Got one of those in the clinic right now. We won't see data till the middle of next year, probably from that. There are a few competitive programs out there that should provide some nice read through there. Cash here is approximately $450 million. So that's going to keep them going for at least till the end of 2024 as well.
Okay, so a lot of these companies, they've preserved their cash pretty well, considering the period. There have been many approvals or many announcements and stuff. It looks like they're doing okay on the cash position, and of course, with why don't you just explain a little bit with like the cash position, how they deploy it, and then like how critical is it? Because a lot of times when they do get the approval, then they do that one thing you have to be worried about it is like an offering to to get more money into the market. Just talk about that process with biotechs, especially with smaller biotechs.
Yeah, so biotechs really kind of focus on making sure they have at least 1 year of cash, ahead of them, and maybe some catalyst in between that, phase before they may run out of money. Most of the money goes into R&D, into clinical trial development costs. You can look at 200 million plus for kind of a large, phase 3 program to get a drug approved. And then that's kind of where merger and acquisitions comes in. We don't want all of these companies building their own separate commercial teams out. It's really expensive. So we're kind of relying on pharma for a lot of these to come in and take them out, prior to having to do that.
Okay. All right. The last one here on your list is Day One Biopharmaceuticals. Well off its high. Dawn, that's a pretty good symbol. Just consolidating here at the $7 area. Tell us what this company's into, potential catalyst, and their all important cash position.
Yep. So this again, targeted oncology biotech. This time with a focus on pediatric oncology. So obviously an area of huge unmet need. Attractive opportunities from a development standpoint. Clear established paths for accelerated approval. The FDA wants these drugs out there as small size clinical trials. Lead drug here is in development for pediatric low-grade glioma. It's a slow-growing brain cancer. Isn't usually fatal, but it does need to be treated multiple times during a patient's childhood, early adulthood. Right now these patients get radiotherapy and chemotherapy after surgery. Debilitating side effects from those, obviously. So Day One's drug shown some really nice data in a small early clinical trial. We're going to get some data from a later stage clinical trial in June from a larger study to hopefully confirm that. Full data from that study early next year, and that should hopefully be sufficient to get that drug approved. Cash position here is 260 million on the balance sheet. That should see them through to the second half of 2024 as well.
Just any general and investing tips for the biotech companies that you cover, as far they've all come well off their highs, consolidation periods. You have it, with not any specific to one particular company, but just general investing tips when if you're looking at the biotech sector.
Yeah, near the top of the list for us is the quality of the management. So go in and kind of see their pedigrees, what they've done before, where they've been. Do they have kind of top scientists backing them? In this market, we have seen a lot of babies out with the bathwater. We're really just focusing on companies that assets are slightly further along, so maybe not just preclinical. They are in the clinic treating patients right now. Maybe with some kind of proof of concept. The ones that have upcoming catalysts that we can get behind and really see that move in the stock. And of course, as you mentioned, with strong balance sheets as well.
Okay. All right. We've been on with Robert Driscoll. He's a senior VP at Wedbush Securities, covering the tricky biotech sector. Robert, we'll keep an eye on these stocks. Definitely, they have pulled back off their highs, and hopefully they'll be coming out with some good trials. So thanks for getting up. This guy got up early this morning, but he probably does every morning there out on the West Coast. Robert Driscoll, Wedbush Securities. Thanks for joining me.
Thanks, Joel. Pleasure to be on.
All right, folks, we got some symbols to look at here. Let me get my screen share back, and let me know what you guys are thinking here, what you're looking at. Andan and Eagle and Jar Jar, what are you looking at today in the market? I don't know if you listened to Craig Johnson this morning, but 4,800 by the end of the year, but we're going to see 3,500 first. So that kind of has your head on a swivel. But what we're looking at, we can only look at what today's price action is. We don't have an inside day going. The inside day, the reason we don't have an inside day going is we took out the high from yesterday. Yesterday's high 54.50. Now looking back, that was a pretty good sale, even though we went to 39.69. What my focus is going to be today, I'm not sure if we're going to be able to do it today or not at all, or maybe later in the week. We had that fluff day on Monday where we got up to 82 and a quarter. We settled at 71 and a quarter, just 11 handles off that high. But we got snapped. We got Snapchatted. And that created the break yesterday to 38.72. So the fact that that's the pre-market high today, the fact that that was Monday's close, I think very important for that to perhaps open up things to that 4,000 in the S&P. But first things first, on the downside, I have nothing for you at the pre-market low. In fact, I have nothing for you down to yesterday's low, 38.72. That's just kind of the way that I do my levels, the way I look at things on a daily basis, which involves a weekly basis. Also, just speaking of weeklies here, I don't know, I have the chart of Dawn up. But here you can see Monday's high and then the current high in the pre-market session right there at 69. What the other thing that I'm looking for today and by Friday is, can we close green for the week? I mean, that to me is a really important thing. We closed on Friday at 38.99.50. That was real close to Thursday's close at 97.75. So at this point, we are still positive for the week. We need to break a 7-week losing streak. Adnan, he's still holding his Microsoft yesterday, and I believe never got a look at yet. Oh, you did get a look at yesterday's high, Adnan. Not really. And I'm sure I gave you that 61.50. You got to 61.33. Boy, matching ranges there. That's pretty important. The close was a little bit lower. But man, all important, holding this that double bottom nearly matching ranges day. So heavy lifting to take it over 61.50. I don't see any chance for a major rally until you get above that and maybe get a $2 pop. Not looking like a possibility today. If you're trying to wiggle out today, right now, I think you'd have to use the closing price of 259.62. So that is a look at Mr. Softy. Let's go. Let's add the pre-market parameters to the chart and see if that gives you any more of a look. No, 262. I don't know when it did that. That was after hours. I don't know why I was fluffing up after. Oh, I guess we had a I don't know if the spoos. I wasn't looking at the spoos after hours, but that just kind of reinforces the importance of that 6150 area. So let's see here. Also looking at UTAA, a semi-sketchy stock. So that is not a great introduction, but let me take a look at it. UTAA, full disclosure, never heard of it. UTA Acquisition Corp. Was this a SPAC? Or is a SPAC? Does it have a deal? Can't really give you much technically on this one. It's just hanging out around $10. So I think I'm gonna pass on this one. To me, it looks like a SPAC because it's hanging out the $10 area. And I don't know if they're looking for some acquisitions or to find a partner. So there is a look at that one. What else do we have to look at in the markets today? If you were listening to Dick's Sporting Goods earlier, we talked about how that 60 level was quite important, at least based on the monthlies. You got quite a bit below that in pre-market trading. But now you got a rally going on. Believe it or not, I'm talking about a rally with the stock down $7. Don't know where this rally is going to end here. The last bracket high since the rebound is 64.37. And then what else do we have in this one? The bottom of yesterday's range is way up at 69.65. So sure, a lot of people would like to see that as a potential gap fill in Dick's Sporting Goods. We mentioned HIBB. That got hit on as well. Boy, this is losing this $40 area. That's concerning. Boom. UTA is a SPAC rumored to merge with OnlyFans. So not too familiar with that. Still here. Just had to get a quick drink of water. Okay, 6 minutes left. We covered the Dicks. Just an update on Wendy's. We got Nelson Peltz pop, and that has not really held up here. You're starting to leak as we speak. Top of yesterday's range is down at 1662. I don't know if you get that today, but maybe if you get that 3,500 in the S&Ps that Craig Johnson was talking about over the next couple of days, that could be a potential entry point. Just a quick update on Nordstrom's. Not good that it's leaking. Opening into yesterday's high. This is interesting for me on this one because not really getting a gap fill. What is absolutely important for this one off the open is it's just a hold right here. Boom, hold yesterday's high, turn up, and we'll forget about the pre-market action because that got a little bit out of control when it went to 25.5. But a quick target, 21.93, and then things open up to the 23 handle if they feel like buying some retailers today. Getting a quick question here on Facebook. I think we did okay talking about Facebook yesterday. Did get the gap down off the snap earnings, and what my focus was yesterday for this stock wasn't that low of the move at 169 even, because that would have been seemed to be a little bit of a tar and feather just because of Snapchat. But what we did is focused of that low close in the move, which was your lowest close since COVID time. Your close is going back to April of 220. The close on this day that you made the low on April 27th was 174.95. Now we didn't quite get there, 176.11. So I think things will thicken up now. Also, for some reason, we're catching a bid here in the S&Ps going into the open. We're still we're closer to the low. We're about 17 handles off the low, and we are 40 handles. Yes, 40 handles off the high. So we've had a nice range today in the pre-market trading. Quick question here on Tesla. Has it found a bottom? Not yet. Trading down in the pre-market, down 617. We talked about this low yesterday at 620.46. Hit yesterday 620.57. If you're taking your shot here, I don't think you want to ride it down to under 600. Next monthly low comes in at 571.22. But if you think the SPOOs are going to get a little rally off the open because they have to buy the stock when being such a big part of the index. So that's what you're looking at. Traded lower in the pre-market, but I think it's someone just targeting the 620 area for some buys, whether long or short, and getting it a little bit of a discount instead of just throwing a huge bid out there at 620 and trying to get hit on it. All right, a few minutes left. Let me know if you have any more symbols that you want me to take a look at. I was asked about NVIDIA here. I believe they report after the close tomorrow. Down again, down $1.74. Low of the move, 55.67. But ahead of that, I have an area of interest today. If you're looking to either cover short or start to build a long position, this 157.5 area is really shaping up to be big. 57.55. That was your low on Friday. 57.80 yesterday. That was yesterday's low. And what else are we looking at here in today's session? Boom. As for Google, Google here. Google is trading in the red here, in the pre-market by 16.52. What was yesterday's low in Google? Yesterday's low in Google was 2044. So that's $60 away. You're going to need a pretty good flush in the market to get down to that level. And resistance, that 20 on the daily. Wow, it looks a little bit, need to fill the gap. That would need to get to 21.83. So if you're looking for a little gap play, gap fill, that's what you're looking at in Google. All right, folks, we're a minute away here. I'm a couple minutes away for the open. If we don't have any more symbols, Nordstrom just lost 21 there. So it is now into yesterday's range. So now you're at the close. So looking at the yesterday's high, 2095 now becomes resistance as it starts to leak into the close. So, all right, going to wrap things up today here. Thanks for joining me. Wednesdays with Wedbush with Robert Driscoll. You can rewind and see some of his picks for the biotech sector. I'll be back at 10:30, pre-market prep with stock odds, and then at the close with Spencer Israel at 3:30. Thanks for joining me this morning. Everyone have a great day, and we'll see you later on.